Good day. Thank you for joining me for the PSG Wealth Offshore Fund Update. Looking back over the first quarter, we saw markets were dominated by the rising bond yields, and a rotation in equities saw value stocks lead the market. Two of the key drivers which led this was the Democrat victory which took place at the beginning of the year in Georgia, as well as the successful vaccine rollout which we've seen in the US and the UK. For equities, global markets advanced, supported by this positive rollout program. With a large percentage of their populations being vaccinated, investors are looking ahead to a hopefully sustainable reopening of their economies. Small cap stocks performed particularly well with respect to their individual markets, with the Russell 2000 up 12% and the UK FTSE Small Cap Index up 9% for the quarter. High commodity prices have also helped value stocks, with oil up 22% and copper up 13% on a year-to-date basis. From a regional perspective, emerging market equities sold off in the last few weeks after starting the year off strong and ending the quarter 2.29% higher. For fixed income, overall it hasn't been a good quarter. As growth optimism increases, Treasury yield expectations are for a higher move by the end of the year. Emerging market debt fell the most over the quarter at negative 4.74%, while European high yield gained the most at 1.5%. Looking at the month-on-month growth in the AUM for the offshore solutions, we can see this has been ticking up steadily, with March being no exception. March was a strong month for the AUM, as we see the total amount sitting at $2.154 billion. Looking at the overall peer group rankings, these remain strong across the board, with the longer-term numbers still producing favorable results. 6 of the 6 funds have produced average and above performance over their recommended holding period, illustrated by the darker rectangles. Another summary slide here just shows how the funds have performed on a 5-year rolling basis. We can see that 3 of the 4 funds are in the first quartile, whilst Global Moderate is in the second quartile. We can also see that over the period, the Global Preserver outperformed the sector average by 81% of the time, the Global Moderate outperformed 40% of the time, and the Global Flexible and Global Creator outperformed 100% of the time respectively. Looking at some short-term highlights. Here I show the top performer and bottom performer over a 3-month period. And what's interesting to see is that the more defensive and quality managers actually lagged over the first quarter, whilst managers which take a broader asset allocation call, as well as having more breadth in the market, were the top performers for the first quarter. Extending it out over the 3-year period, we can also see here how our underlying managers have performed, and we can see a strong majority of them have outperformed their respective benchmark. Looking at the risk radar on the bottom of the screen, we can see that there are 4 funds on a quantitative radar which will fall within the Global Creator, that being 91 Global Franchise, Fundsmith Equity, Threadneedle Global Select, and Net Group Investment Funds Global Equity. Looking at the individual fund performance. For the 3 months ending March, the Global Preserver was up 1.36% and produced a 1.29% outperformance relative to its benchmark. The fund remains above over the 3-year holding period as well as since inception. As I mentioned previously, the fund has maintained an outperformance against the sector average 81% of the time, here over a rolling 3-year period since inception. The fund has also averaged an excess return of 97 basis points per annum on a rolling 3-year basis and is currently ranked 11th in the sector since inception. For the Global Moderate, although the fund was up 1.82% for the quarter, it unfortunately lagged the custom moderate allocation by 27 basis points. However, over the 5-year holding period as well as since inception, the fund has produced favorable results. Looking at the ranking tables, we can see that the fund is split between the second quartile and the third quartile. However, we are seeing the fund increasing in the shorter term. For the Global Flexible, the fund lagged its Morningstar USD flexible allocation for the month by 97 basis points for both the pound and the dollar class. However, still remains favorably above over the 7-year recommended holding period as well as since inception. Here I show the fund has outperformed the sector average 100% of the time over a rolling 5-year basis. The fund has also averaged an excess return of 4.31% per annum on a rolling 5-year basis and is currently ranked 3rd since inception. Looking at the Global Creator, the fund was up 3.45% for the quarter, however, still lagged its Morningstar Global Large Cap Blend Equity benchmark by 98 basis points. Over the 7-year holding period, the fund is well above the sector average by 3.26% and 2.3% since inception, respectively. Looking at the ranking tables, the fund has outperformed the sector average 100% of the time on a 5-year rolling basis since inception. The average excess return has also been 2.9% per annum on a rolling 5-year basis, and the fund is currently ranked 100th since inception. As a conclusion, this just ties all together that PSG Multi-Management is achieving their 3-pillar approach of consistent above-average performance at below-average risk and at a competitive price. Thank you. Please take note of the following disclaimer.